You are watching Market Watch, the brief overview of the key events from the world of finance. Today, President's Day is celebrated in the United States, and therefore stock exchanges are closed. A prolonged weekend in the United States will contribute to a decrease in trading activity in the foreign exchange market, but with the opening of trading on Tuesday, there may be a surge in volatility. It's not just about key stock indexes and the US dollar, but also the excitement in the precious metals and cryptocurrencies market may increase. The main topic for investors remains the monetary policy of the Federal Reserve, because a few weeks ago the key scenario took into account the reduction of the Fed's main interest rate in March. But last week, the probability of this scenario reached 10%. Consequently, demand for the US dollar remains stable, although buyer activity is moderate. At the same time, the S&P 500 Broad Market Index updated its historical maximum, ending the week above the psychological level of $5,000. This is clearly a bullish signal for the market, but an additional growth driver is needed to implement it, which may be the Fed minutes, the publication of which is scheduled for Wednesday evening. Discussion of changes in the Fed's monetary policy may have an impact on gold, as any confirmation that the Fed will not lower the rate in May will act as an additional bearish signal for gold. However, by the end of last week, the activity of sellers had significantly decreased, indicating increased investor interest in the protective asset. After all, high interest rates increase the likelihood of a negative scenario for the US economy, which in turn is bullish for gold. But only the easing of the Fed's monetary policy can provide significant support to the precious metal. And now let's move on to the cryptocurrency market, which is still bullish. The growth is due to the emergence of opportunities for investors from the United States to buy Bitcoin through an understandable tool, exchange-traded investment funds. But it's not just institutional investors who are pushing the price up. The largest cryptocurrency exchange, Coinbase Global, reports an 80% increase in revenue in the fourth quarter from consumer transactions compared to the third. This is good news, because the previous wave of growth, as a result of which Bitcoin approached the $70,000 mark, was largely formed by retail investors. Therefore, the emergence of Bitcoin ETFs expands the channel of capital inflow to the cryptocurrency market and is not the main source. Therefore, the long-term bullish scenario remains a priority. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.